Did you know by the early to mid 1800s, even death had become insurable? As I said, modern insurance began in 1688. London, Edward Lloyd's Coffee House, with essentially what was a single craps table, let's call it shipping. By the mid 1700s, stakes at that craps table got a little bit larger when they added human life to the ante. Now, though, it's the early 1800s, and it's time to add more tables. So insurance spreads beyond just shipping. Now it's buildings, homes, factories, businesses, each one of those covered by specialized insurances. Fire, flood, liability, property, the list goes on. And as I said before, yes, even death becomes insurable. It's called life insurance, which I've always found to be an ironic name since they don't pay it until after your death. I mean, now that risk has proven insanely profitable, the sky's the limit for these people. Now, it's at this same time that insurance and banking start working together. Now that assets are insured, banks are a lot more willing to lend. Thus, this is the birthplace of the modern mortgage. Now, it's not the 30-year mortgage we picture today, but long-term property lending became possible for the first time during this period. And from the bank's perspective, it makes sense. Insured property is way safer. The loan itself is backed by collateral, the property, and then that collateral is then backed by insurance. It's foolproof. The interest is generating profit while the insurance is minimizing the risk. So naturally, during this period, credit expands and prices adjust to match it. And now the cost of insurance is getting folded into nearly everything from housing, goods, transportation, the list goes on. The notion of not carrying insurance becomes imprudent. Early to mid 1800s, it stops being about one game. I mean, can you blame them? Why stop at one table when you can run a whole casino? As always, have a wonderful day. And if you like my slightly serious history, slam that like button and subscribe.